I'm Gaurav, and I lead the startup ecosystem initiatives for AWS across Asia Pacific and Japan. Singapore is one of the fastest growing private wealth hub, and the fintech landscape has been rapidly evolving. There is a lot of innovation happening in fintech space, as also evident from the rising VC funding for fintech over the last couple of years. As part of this panel, we are going to focus on investors' perspective. How they... Sorry, there is some...
Yeah, you send me so that I can make a book.
Okay, okay.
Yeah, so that everything is under SFF.
I think someone needs to mute.
哦，应该是啊。Mr. Cole.
I think Gaurav is on mute. Gaurav, you're on mute, I think.
Yeah, Gaurav, you're on mute.
Sorry for the hiccups. I think we should be good to go. All right, so as I was saying, as part of this panel, we're going to focus on investors' perspective on how they view the fintech landscape in Singapore. What are the key trends and guidance for fintech startups to push through the current turbulent times? Joining me are Paul, managing partner at EDB Investments, Carmen, partner at Vertex Ventures, and Samir, principal at Insignia Venture Partners. Welcome, everyone, and look forward to an engaging discussion. Great. So let's all start with a quick introduction, if you don't mind talking about yourself and also your fund's investment focus, especially the stages and the sectors that your fund invests in. Let's start with you, Carmen.
Okay, thanks. Hi, everyone. Good afternoon, and thank you for joining us. So FinTech Ventures has been in the ecosystem for quite a while. We are primarily a Series A investor, and we generally like to lead, given that it's Series A we are talking about. And we invest across 4 sectors: enterprise, so that will be the B2B space; consumer internet, that will be otherwise known as the B2C; FinTech, and most recently the healthcare vertical. So our active fund is about $305 million US, and we are in year 1 of our investment period. So we do have quite a fair bit of a dry powder. Yep.
That's amazing. Samir, over to you.
Sure. So I'm part of the investment team at Insignia Venture. I lead our fintech efforts here. So we are a $300 million early stage VC fund focused on Southeast Asia, of course, and headquartered here in Singapore. The fund is sector agnostic, so we invest primarily in Series A rounds, and our check sizes range, generally speaking, between 3 to 10 million. And we've been up and running for about 3 years now, and we've made about 60 investments.
Nice. That's a nice track record. Paul, over to you.
Hi, everyone. I'm Paul. So I'm from EDBI, which is a Singapore-based government investment fund linked to the Singapore Economic Development Board. We invest both in Singapore and globally, mainly in high-growth technology sectors or software, emerging tech, and healthcare, typically in growth stages of Series B, C, or later. We also invest in Singapore SMEs, working very closely with Enterprise Singapore to help Singapore companies grow into regional players. Being government linked, I would say that an important part of our mandate, other than financial returns, is to meaningfully support companies to expand into Asia or globally, through or out of Singapore.
Well, I'm glad to have such a diverse panel, and all of your funds seem to be investing across different stages of startups. So I'm keen to hear more about your insights. So why don't we double click in terms of your focus into the fintech space, maybe in the current portfolio or your plans ahead? Carmen, maybe let's go in the same order. You're on mute, Carmen.
Yikes, I'm sorry. Technical challenges. So the 4th fund is a new fund, but let's talk about Fund 3. So Fund 3 was active since 2016, and we have invested about 40% of our funds into the fintech space. And this includes companies in the cross-border payment spaces, formerly known as like remittance or even just the traditional payment companies to lending. So both SMEs as well as for individuals, both from the productive as well as consumption lending. We have also invested into a full stack insurance company. And not to mention, there's quite a number of companies within our portfolio that is in the enablement technology space for financial services. So this, you can think about it like example, chatbots supporting financial services, or even tools to enable digital lending, right? So these are from the Fund 3. But for Fund 4, we have also invested with a serial entrepreneur who's making waves in the buy now, pay later space. And you know this space is very hot right now. And because the fund is relatively new, we will continue to seek out investments in the FinTech area going forward. Yeah.
That's awesome. Samir?
Yeah, so for us, about a third of our portfolio is within like the broadly defined fintech space, and I'm including insurance and PropTech in there as well.
Absolutely.
And we have investments, of course, across our core geography, which is Southeast Asia, so Indonesia, Singapore, and Vietnam. Within that, we have invested in multiple segments over the past 3 years: payments, B2C and B2B, lending, wealth management, personal finance, insurance. And we have, I guess, a range of brokerages that are, real estate brokerages, stocks brokerages, and insurance brokerages. We've recently invested also in a neobank in the Philippines, the first of its kind in the country and the first of its kind in the region as well, called Tonic, which is just about to launch.
Wow, I'm keen to talk about neobank a bit later, so we'll hold on to that. Paul, over to you.
Okay, so EDBI has been investing in fintech actually for a few years already, with a very strong B2B focus. And the last I counted was that we have nearly 10 fintech companies globally, mainly in the US and Europe and of course Singapore, across a broad range of sectors from payments, financing, insurance, governance, risk and compliance, fraud prevention, private exchanges, FX, and enabling infrastructure. In Southeast Asia, we have also invested in a few of what we call tech fins that leverage their core businesses to roll out financial services. So sectors that might be interesting for us moving forward would be, in B2B payments. We're interested in solutions that streamlines the mid to back office processes. We're interested in solutions that can be extended to our SMEs. As well as enabling solutions for digital banks, wealth management, and even green finance, ideally, enabled by some form of AI.
That's a very broad spectrum. We couldn't go deeper than that. So let's get into some of those specific topics. And Carmen, to start with you, would love to understand how you view Singapore fintech landscape versus some of the other Southeast Asian markets. I understand you've been personally looking after Malaysia and Thailand markets, if I'm not wrong. So how do you compare the two markets or across the different markets?
So I will just put it this way first, right? So Singapore actually has a head start in creating and developing the tech startup ecosystem. So we actually started the journey some 15 years ago. So we started with, of course, other kind of technologies before moving into this space called FinTech when it became sexy and popular, and it was a natural progression. So this actually gave us a lot of time to build up our tech talent. But honestly, even though we are building up, we are still playing a chasing game, right? We do not have enough talent. And when it comes to FinTech, we're not just talking about technologies or people who are just developing code. We're also talking about people who are familiar with compliance and the methods behind it. We're also talking about people who are familiar with data and how to analyze data. We're talking about people who are familiar with social data and how to layer upon the rest of the FinTech technology. So technology is merely a platform to whatever businesses that you want to do, right? So when I look across Malaysia and Thailand, so similarly, they are also in the FinTech space, or they are also in the technology space. And similar to us, they also have people, young people who have studied abroad, who have spent their time working in some of the large internet companies before sensing a calling to come back to Singapore to do something for their own country, right? That's why when you compare the number of fintech companies between Singapore, Malaysia, and Thailand, Singapore is still by far the largest number of companies or startups, right, in the fintech space. And then when it comes to fintech, you will have themes that run across, and they all kind of like happen at about the same progression, right? So you have companies that will start with doing comparison sites, price comparison, before they move upstream to include things like P2P lending or digital lending, robo-advisory, payment remittance, and then of course the more sophisticated blockchain or even insurtech propositions. And of course they've got the various cryptocurrencies and therefore all the exchanges. And because fintech is fin first, then technology, what it means is that businesses are likely to have to adhere to local regulations. And therefore, they don't have much of a choice, right? You can only play within the local regulations requirements. Now, so what differentiates one market from the other, to me, will be actually the startup's ability and the desire to execute and their ambition to scale. So it's knowing the difficulty that each market presents. How much are the startups willing to actually adhere to new rules and regulations, and therefore it will take time? How much are their investors willing to back them because they need time? And in that aspect, Singapore is actually very privileged because we are all 5 million people only. And so our fintech companies are forced to cast their bet beyond the little red dot. They don't have a choice. So when you look at NEOM, they provide cross-border payments. They actually expanded their corridors so aggressively across Southeast Asia, South Asia, Australia, to India, and even Greater Asia and Europe. And similarly, from the enablement side, if you look at a company, Turnkey Lender, they have actually built beyond Southeast Asia, and they have built very good traction across US, Europe, Latin America, Africa, and of course Asia. So when I look at look across these three regions, it's not because they are different, but really it's down to how aggressive the startups are in pushing boundaries and in going beyond borders.
Absolutely. I think you put it very well. Like each market has its individual characteristics and depends on the execution and how aggressive the entrepreneurs are. So let me flip the question in a different manner. What do you see lacking in Singapore fintech ecosystem, and therefore, how do you see what could be the role of, say, corporates or regulators or governments to help fill that gap?
Since we're in the middle of FinTech festival, I shouldn't say that anything is lacking. But I have to scratch my head a little bit and think about a couple of things. I think we probably need more vertical specialists, like at all level. I mean, FinTech vertical specialists, of course. Maybe former FinTech founders who are going to turn angels, that are capable of like spotting new industry trends. We probably need more smart early stage and growth stage capital capable of like bringing FinTech expertise that, as Carmen pointed out, we sort of like sometimes lack that expertise here, and so that sort of like investors are going to be able to bring it from other international markets. I think it's good that we see more and more top tier FinTech funds looking at Southeast Asia, and hopefully we're going to see more and more of them being able to pull the trigger on some startup in the region, right? I would say, of course, I definitely need to talk about this, but I would love to see how the newly minted digital banks players are going to set up their operation this coming year, now that they've been awarded their license. And I guess as a segue to what the AMIS has done for the ecosystem, I mean, frankly speaking, for the region, right, the AMIS has been seen kind of the lighthouse, right, the really forward-looking regulator, especially when it comes to things like crypto regulations and frankly speaking, a lot of verticals within FinTech. I would love to see more efforts being put into open banking regulation, for instance. I know there's sandbox in place, but I think this is definitely going to, once open banking environment is set in place, we'll see more and more FinTech founders being able to build their own product on top of that kind of FinTech infrastructure. So yeah, looking forward to that.
Absolutely. Paul, anything you'd like to add, specifically given you have worked extensively in the US, and US is a very evolved market relatively. So how do you see the trends and some of the areas where we should evolve as the Singapore FinTech ecosystem?
Yeah, I think if you compare Singapore with the US, right? I think obviously US has the most has a much more mature startup ecosystem, not just FinTech in general, right? But as Samir mentioned, the FinTech ecosystem has evolved in Singapore meaningfully over the past 5 or 6 years, and clearly the MAS has a huge part to play in this, and they have a very unique role because they have both a regulator as well as ecosystem developer role, which I think is quite unique. You don't often see a central bank and ecosystem developer sharing this, being the same entity. So I think that has is pretty unique and was very helpful in us growing the ecosystem. But I think we still need to see more meaningful exits, to reach that next level, right? But I think it's a broader question for Singapore or Southeast Asia's startup system in general.
Absolutely, yeah. Some exits would be nice.
Mm-hmm. Yes. So maybe I can talk a bit about some differences that
sure.
to Southeast Asia or Singapore versus that of the US. So I think there's some structural differences that might serve either as opportunities or challenges. So as the obvious one is that US, like China, they have a huge hinterland, right? And it's relatively more homogeneous, especially regulations wise, which allows FinTechs in US to grow to scale just targeting the US market. Right? But as Carmen mentioned, Singapore FinTech startups, they have to go beyond Singapore at day one, right, to address the Southeast Asian market opportunity. If not, it's going to be a red flag for most investors, right? But the problem is that even when they do, the FinTech startups have to deal with this whole fragmented nature of Southeast Asia, where every country has a different regulatory license regime. And this is especially painful because FinTech, is subject to regulations. The other point, I guess, I would like to bring up that is unique as well in Southeast Asia versus the US is that, in Southeast Asia, there's this dominance of B2C category leaders, right, in sectors like ride-hailing, auto commerce, marketplaces, as well as the emergence of super apps like Grab and Gojek. And if you couple this with the overall relatively low price point of everything in Southeast Asia, right, because Asians are the price point isn't that high, right? So these large players will almost always look to provide FinTech offerings to help make a better margin. So there are numerous examples I can put, but the most recent example obviously is the move into digital banking by Grab and Garena or /C. Now the implication of this is that these large tech fins can then be very strong direct competitors to FinTech startups and will naturally have to make their own decision, whether to build, buy, partner, or invest, right? And we've seen that at least Grab and Gojek, they are open to acquisitions to pad up their FinTech portfolio. Grab, I think, acquired Bento for wealth management, and Gojek acquired a few FinTech startups, including our portfolio company Mocha POS.
Nice.
But if you compare that with the US, right, I think at least in the US, it's a bit less apparent. There hasn't yet emerged like a dominant super app in the US that kind of tries to do everything. Maybe except for Amazon.
Maybe it's too big a market, yeah.
Yeah, but no, it's just different. And coupled with this whole large domestic market that US has, they allow the US FinTechs to go at scale quickly without being snuffed out early by large, well-funded, innovative competitors.
Yeah,
I guess one more point.
Sure,
go.
No, please, after you.
Yeah, I wanted to add another point is that the banks also in Singapore and Southeast Asia, right? They are not standing still. So if you look at the likes of DBS, UOB, they have quite strong digital capabilities, and then they're already now reducing their cost to serve by I think announcing or launching digital banks in Indonesia, Vietnam, Thailand, and so on, right? So the overall implication to all this is, I think, fintechs in Singapore, unlike their US counterparts, right, will have to adopt a more collaborative approach with the large tech fins and incumbents, right, rather than being disruptive, which some of the US guys want to do.
Yeah. Well, I think the domestic M&A market in that sense is a great thing for the Singapore startups. Plus, with all the banks also getting into innovative domain, I think the best beneficiaries are the customers, right? Because the customer experience keeps increasing and becoming better with that innovation.
Yeah.
So,
let
sorry,
me just chime in here on Paul's last point, right? I feel that yes, it's true that the banks, our large banks, are not sitting still. Totally agree. They better not, right? They have to wake up. However, what I noticed is that they're still pretty traditional in some of their mindset. Is that while there are technologies out there, some of them are very hesitant to adopt technology.
Yeah.
They much prefer to build than to acquire. So I feel that sometimes the ecosystem is one where there's certain tension. We have got Singapore companies made in Singapore. Then you do need certain levels of validation. And when the large banks are like hesitant, then it doesn't help our local companies or local startups to gain credibility when they try to scale outside, right? So this is where us as investors, we realize we have to do quite a fair bit of heavy lifting to basically sell our companies overseas before they make their clients in Singapore. So perhaps one of the models is that for larger companies, regardless of whether they're banks or otherwise, if they are fintech solutions, be more open to looking at working with startups. I mean, the whole API economy is about considering working with partners, right? Yeah.
Absolutely. Yeah, I think it calls for more collaboration. In fact, from our side, I can share on the AWS front, our teams, we've been doing a lot of these startup to enterprise connections like speed dating and pitch days just to drive that level of collaboration. But totally take your point. Samir, I'm very curious to talk to you more about some of the interesting trends that you called out briefly, like open banking, neobanks. Can you elaborate a bit more in terms of like the top 2-3 major fintech trends that you're observing?
Yeah, absolutely. I mean, a lot has been discussed already, but I would say obviously neobank is a form of fintech remodeling, right? You're just putting together everything that a bank has in terms of service and putting it into a digital first format. And that's what we're expecting from neobanks of the future, right? Whether you look at emerging markets.
Sorry, is it just me? I kind of lost you, Samir.
Likewise, I lost maybe.
Oh, okay.
20 seconds ago.
Sometimes my AirPod switches the audio channel, so wasn't me. Samir, can't hear you still. Are you on mute?
Hello, is this better?
Perfect.
Okay, great. Yeah, no, I was just saying there is definitely a rebundling trend that is happening through neobanks, and we've seen it just like we've seen it in different versions of it. So we've seen emerging market versions of it with the success of Tinkoff in Russia and Nubank in Brazil, as well as developed market version of that with the Revolut, the Chime, the Monzo of the world, who have been all of them sort of like rebundling that basic banking proposition into a digital first format. So that's one, I think, is a very important one. We see more and more, I guess, innovative solutions around that problem that is sort of like plaguing any emerging market in South Asia in particular, which is closing the consumer and SME credit gap. So I think Carmen alluded to it when she spoke about buy now, pay later. So that's, I guess, a better way to solve that credit gap as opposed to your run-of-the-mill digital loan sharks, if I may call them that way. And yeah, so I think that's kind of one way of doing it. I've mentioned briefly PropTech being one of those segments that I look for, but we are looking at a new generation of PropTech businesses where they are really end-to-end. The likes of Baker in China are sort of like model that a lot of those like end-to-end real estate brokerage are modeling themselves after, right? So we invested in two of such brokerages, one in Vietnam called PropZ and one in Indonesia called Pinhome, and they're frankly speaking doing pretty well so far. I think the last trend that I want to mention here is on the insurance side. So of course we've seen the rise of a lot of insurance brokers over the past maybe few years, and there's some of them who have already reached certain scale here in Singapore, Indonesia, and in Vietnam. And I guess for them now, the next few years are all going to be about going up that insurance step curve and acquiring a carrier license and becoming like a full-fledged insurance carrier. And so if given the opportunity to do so, I think they'll definitely jump on it. So we see that acceleration of insurance bundling going forward. Yeah. And I think finally, I think Gaurav, you mentioned it, but on the infrastructure side, I mentioned open banking, but what I feel what is going to happen with fintech is like just like e-commerce had logistics players being built to sort of like provide the necessary pipes for e-commerce to thrive. We'll see more and more players doing the work around banking as a service, insurance as a service for new fintech models to emerge. So I think that's this on the core fintech side. We also at Insignia taking a close look at some interesting development around decentralized finance, DeFi. And we haven't made any investment yet into that particular vertical, but a lot of it is happening on that front as well.
Wow, that's a lot of innovation happening. In fact, as part of my role, as I manage some of these markets across APJ, I'm seeing open banking quite active in the other markets as well outside of Southeast Asia, like Australia, New Zealand. There's a big wave of open banking. Korea has my data on similar lines. So that club with like neobanking and all, I think it's just like a big wave of disruption across the globe, right? Awesome. So Carmen, if you'd like to if you'd like to add anything on that, specifically you mentioned, I remember your investments were across different verticals of fintech. So which are, say, the top two subsegments of fintech industry that you're more bullish about?
So I will mention two areas. So one of the subsegments that we have not invested into, and actually, I think Samir mentioned you already have, and actually quite a number of investors have invested into, is in the area of wealth tech or robo-advisory. So it's not because there are no good startups. Actually, we have met quite a number of startups. I think what they are doing is great, but we felt that the challenge was more because in our region we have a bigger problem on hand. So if we were to look at digital lending, right, which are the ones that have come, went, and destroyed wealth and lives? So this were some of the more, peer-to-peer consumer lending that were irresponsible. So what they promised was high returns to lenders and at the expense of borrowers. So you know the story. We have got folks in our region who will borrow from one platform to patch and pay up to another platform just to make ends meet. Right, and then there's also this saying about the rich will rule over the poor, and the borrowers will be slaves of the lender. So in our region, I feel that our issue is more because we have got individuals who are living on credit, right? So how can we help these individuals? What are some of the changes that has to happen for individuals to scale from living on credit to move a notch upwards, to start having savings before we can even speak about investing and then building wealth? So to me, we do like some of the wealth tech propositions, but we felt that we have got some other problems on hand that probably needs to be addressed. If not, then the wealth tech is really serving a portion of the larger population, and we like to do things where it can really move the needle, where it becomes more incumbent than it is for a select few. So to that extent, the way I look at it is that it's okay to have lending companies. It's perfectly fine. But perhaps we should look at lending startups that are more in the space of productive lending, And so along that line, how do you so when it comes to productive lending, there's also consumer and enterprises or SMEs. So I see that this is not a one company, one winner takes all. You can have multiple companies. So we should see more companies. And along with this, it will be developments in the alternative credit scoring model or alternative scoring models and methods, because there's going to be a lot more data that is sitting out there. So I see this as one of the subsegments that's really interesting. Boring but interesting, and it's still lots of area for refinement and development. Then the second segment that will be interesting will be in the InsurTech subsegment. And I do echo what Samir had said, right? That we have seen companies that are growing. Now, thanks to COVID and thanks to the limitation of universal care that the government provides, right, in each country, people are now more aware and are more conscious of having the need to have some form of health insurance. So how do you create a product that is not just priced affordably in each market, but how do you get the product into the hands of the people who need it without incurring too significant a distribution cost? And also, how do you factor in the risk so that the insurer ultimately can still make money? So to me, this is going to be a space that I will watch. And to the extent we are very privileged to have started that journey with a full stack insurance player in Thailand, called Sunday Insurance, which is also an AWS client. So it is a space that I think will definitely evolve. And as we scale the company beyond Thailand into the region, it will be interesting to see more people looking into health insurance where they themselves take control of the policies themselves. And how do we then move this into more people?
Got it. So productive lending and health tech insurance, right?
Yep.
Awesome. Right. I just want to take a quick pause here to just check if our friends from SFF could confirm how we're doing on time. Tech, do we have how are we doing? Do we have 10 more minutes or so? Okay. Okay, cool. I'll keep going. There is an interesting question as well from the audience. So Paul, maybe we'll take that with you. Why aren't tech unicorns listing on the Singapore Stock Exchange? You talked about exits, right? So maybe you can throw some light on this.
Yeah, that's a good one. I think it's at the end of the day, I think when management or the board looks to exit, a big part of what they're looking for would be a post-market liquidity, which obviously translates to valuations, cornerstone investors, and so on, right? So I think where certain companies, at least in Asia, have chosen to go to Hong Kong, for example, because you kind of get that valuation bump premium, or Nasdaq, where some of our, for Gavina, for example, C has chose to list in as well. I think it's all about valuation. It's all about post-market liquidity, which probably our stock exchange probably has to figure out how to improve on that front. But I think it's an area of concern, and I'm sure there are people thinking about this issue as well.
Yep. Thank you for asking that question from the audience. Samir, want to understand how your fintech portfolio has been impacted by the current turbulent times, and any interesting guidance that you can share on how should entrepreneurs just push through these times?
Yeah, good question. This question we've been repeatedly asking ourselves over this past year. I think, frankly speaking, we ask all our founders at the beginning of this year to go back to the drawing board and really think hard about their unit economics, right? And how they can build a more resilient business in a way, right? I think we saw our lending businesses pretty much all weathering the crisis really well. For instance, despite being in a broader market where non-performing loans weren't going through the roof, being impacted in some part of South Asia by government-imposed loan moratorium, and they have all recovered decently, and for two of them actually exceeded their pre-COVID-19 origination levels, right? So it's really about going back to and thinking hard about whether or not whatever I'm spending on CAC, am I able to recover it over a couple of months, as opposed to recover it over a couple of years, right? Or even on the first order. I think some of them have even been able to launch and grow their offerings from scratch, right, during the crisis. So I mentioned our real estate brokerage at the beginning of just a few minutes ago, but Pinhome has been able to start and launch their product in Indonesia in the middle of lockdown, so Q1 this year, right? Ajaib has launched their stock brokerage, which has done tremendously well, which is also kind of a reflection of how Robinhood has done really well in the US as well. So yeah, I mean, I think both of them are launched in the middle of a crisis, and it's really a testament of couple of things, right? One, thinking about how to adapt my product in this kind of environment. What do the customer wants, and how am I able to sell it at a much better unit economic rate than in now what I feel is a long time ago, where VCs and the market were a bit more lenient when it comes to LTV. Yeah. I think that time has passed.
Yeah, and Paul, we have observed, just in terms of at least the funding, the late stage funding like Series C and above continues to stay healthy. But what's been, in your perspective, the impact of COVID to the fintech market, and anything that you would want to share on similar lines on how should startups just brave through these times?
Sure. Well, so I'm not sure if you know, but EDBI is running the growth stage part of the Special Situation Fund for startups, or SSFS.
I know that.
Yeah, so there was a fund kind of recently announced by the government to help promising innovative startups tied over COVID. So we run the growth stage part, Seeds Capital run the early stage part. So we have some insights on this as well. I think generally March and April, I think across the board, it was difficult for everyone, right? Because there were lockdowns, it was just difficult. But post that period, I think different fintechs are kind of affected differently, right? I think generally, if you look at it, the lending companies, if you ask me, were impacted the most, because credit quality of, say, SMEs or just deteriorated over the board, across the board, and funding sources, as investors became a bit more conservative, slowed down as well. On the other hand, payment companies like Niam, for example, I think Kamal would know, generally if you ask me, would be a bit more resilient, because digital transaction volumes will be healthy. There might be some jobs due to travel lockdowns or whatever, but COVID, I think, helped accelerate the mainstream adoption of digital financial services. But overall, I think enterprise sales cycles slowed down because everyone's kind of focusing on the core business rather than adopting new fintech solutions. So there's that lengthening of the sales cycle there. But I think this is one of the times where you would appreciate that that you have existing investors with deep pockets or reserves. As you mentioned, there's still capital. Prior to COVID, there were record high VC fund closes, if I'm not wrong. But generally, I think VCs just got a bit more conservative. They had to protect their own portfolio. So I would think overall investment volumes would have dropped. We need to see quality companies being supported by insiders or new investors. For what we have seen, the good companies, they would have reacted very swiftly, streamlining operations, focusing on what is core to them. And I think this is a very good, in a way, being optimistic, right? It's a very good opportunity for them to emerge much more stronger from the crisis.
Absolutely. And Carmen, let me round up this discussion. With you, if you actually talked about COVID being tailwinds for the insurance industry. In your perspective, how else startups should look at COVID in a positive light?
it is actually an equalizer experience, right? So as a result, you really have to have a strong proposition in order to stay relevant to your customers. So if not, then forget about the customer experience and forget about your purpose of existence. So actually, COVID actually brings about things that are necessary as opposed to things that are just merely vanity, right? So you see how people are now making use of things that are otherwise entertainment, example TikTok, to make a living. How they are using WeChat for communications, but now for group buying. So things become necessary because it allows them to earn a living. On the same token, I would say that because of COVID, at the same time, Southeast Asia is actually flush with a lot of investment money, right? The game has to go on. We have an obligation to our investors. So for sure, we will still be looking for opportunities to deploy our money. And COVID actually shows us which are the segments that actually gain a lot of investment interest: entertainment, education, e-commerce or social commerce, therefore logistics and healthcare, right? Now, how will this kind of companies transform themselves to now provide a FinTech experience? There's this saying, right, that says that, oh, every software company can become a FinTech company. And it is true. If you have got a consistent user base on your platform, then what can you do during this kind of period to continue to keep them on your platform? Be it to provide them a longer payment time, so you will have to make sure you've got darn good scoring on them, or you can provide them with discounts, or you can provide them with avenues to earn more money because they refer other people to you. So to me, actually, COVID brings up creativity in a lot of other startup companies and in new business opportunities. So it's actually a very good, I mean, sadly, but it's a good differentiator for great companies, great creative companies versus the norm.
Absolutely. I think there is some opportunity in disguise in these current times. And I can truly relate to like it being an equalizer and all the other, I think insights. I really love this conversation. We learned, at least I learned, that there is a lot of disruption happening and there are a lot of opportunities for FinTech founders. And as Carmen mentioned, there are different characteristics of each market, Singapore including, and it will depend on how aggressive and how ambitious and how strong is the execution for the startups. So with that, I would like to thank you all again and hope the audience enjoyed the session as much as we all did. Thank you so much.
Thank you.
Thanks, Gaurav. Thank you.
Thank you very much.
Thank you.
Thanks all.
All right, we'll log off then, if that's it.
Have we stopped the recording, Texan?
Hey, thanks, Dixon, Fanny, for arranging all this.
Thank you all.
Yeah.
All right. Have a good afternoon.
Yeah, same to you.
Bye.
Take care.
We'll
Bye.
follow up on email.
Sure.
Yeah.
Right. Thanks, Asman.